Equity markets are doing okay, so let's turn our attention to the commodity markets. Manisha Gupta is standing by as always to tell us what's going on there. Manisha.
Thank you so much for that, Nigel. Well, I'm looking at the crude oil prices where after 5 days of decline, we're looking at some respite consolidation coming in for the prices. Remember, for the month of November, we saw a decline of nearly 7% for the crude prices. December as well has started on a weak note here. If you look at the fundamentals, well, that continue to weigh onto the markets. We are trading at an 11-month lows right now. So these are the prices that we saw in December 2021. And these are the prices that were before the Russia-Ukraine war actually began. Manufacturing activity numbers have continued to be on the weaker side from US and Europe. That continues to weigh onto the prices. And it's not just crude. There is a decline that we have seen across petroleum products as well. The US inventories, while have seen a decline of 5.2 million barrels per day, and this is a second week of decline into the markets, is the reason you have seen some buying coming in. But there has been a build-up when you look at the gasoline and heating oil and natural gas inventories. There is the reason you're looking at gasoline prices now trading at a one-year lows. Heating oil prices have continued to decline. That one is trading at a 3-month lows as well. I also want to put on a picture on how the crude varieties have traded in this year until now. This is the high and the low for major crude varieties. While, of course, we talk about Brent and WTI, I'm talking about Russian Urals right now because we have a price cap at $60 per barrel there. But we have seen prices trade at $53 a barrel. The high of this year was in March at 111. So that is the case with all the varieties. We are nearly half of where we were on the higher point of 2022. So we nearly are closing this year in the negative when it comes to the crude prices there. This is what we've done on a month-on-month and an year-on-year basis. Still 20 days to go, so those figures clearly will change. But in last 1 month, as you can see, we have seen a decline across crude and varieties. It's only coal which is trading in the positive on month-on-month and year-on-year basis. On a year-on-year basis, we still are on the positive side when it comes to the crude products there. But the markets continue to watch out for the kind of demand that we will especially come in from China. This is the data that tells you on where the global oil supply stands right now. So 99.9 million barrels per day is this year, and the expectation of slight jump there at 100.7 million barrels per day. This perhaps is going to be on the weaker side of growth numbers when we look at the supply there. Demand also not too much of a change there as well. 99.82 is where we perhaps will close this year. Slight increase of nearly at 100.82 million barrels per day is what we are looking at the next year. So it's going to be quite a bit of a balance as the markets are anticipating for the next year there. This is what the US will do, and the markets will keep a keen eye onto this one as well. So while this year there has been an increase and up to 11.87 million barrels, next year is going to be even higher at 12.34. So that means that is the kind of oil and gas that you might see coming in from Europe as well. But the major important number clearly is the price trajectory that you might see in 2023. EIA and Fitch actually have a lower side of expectation on crude oil prices, anywhere between 92 to 95. Wood Mackenzie also talking about 95. And, well, 3-digit is back. Bank of America expects $110 a barrel in the next year. And that's exactly the kind of numbers we've seen come in from Goldman Sachs and Enverus Intelligence. They're also expecting 100 and 110 of an average for Brent prices to come back in next year.
All right, Manisha, thanks very much for that. Commodities and focus oil in particular. PSU